Hi everyone, Ali here on April 7th, 2020, Tuesday. So the question is, what kind of a recovery is this, and is it important to know? So before I get into it, I just wanted to show you two clips. I was just surfing on YouTube today and stumbled over one of the interviews of Warren Buffett, dated February 24th. So I figured, let me just, listen to it. And this was the day when the market started falling. So let's listen to what he was saying that day.
Well, there are a lot of questions that are coming in from viewers that have been hitting here today. They're waking up this morning looking at the stock market indicated down by almost 800 points for the Dow. We're actually off our worst levels of the morning, which is something to say when you're still looking at the Dow down by about 786 points. But people have a lot of questions about the economy. They're wondering what's happening right now, particularly with the coronavirus out there. You have a lot of economic data at your fingertips because not only are the many businesses that Berkshire owns, but the businesses you own pieces in. What are you seeing right now around the globe?
Well, it affects various businesses. I would say that I received commentary. I get some commentary monthly from almost all of the companies, and a good many of them had some comment about how it was affecting them, and however it was affecting them at that time, I'm sure it's accentuated. But they were affected by tariffs, they're affected by taxes, they're affected by the most thing is they're affected by competitors and supply and demand over time. And I don't have the faintest idea what our businesses will be doing 6 months from now or 12 months from now. I do think that not only our businesses, but American business generally will be doing fabulously better 30 years from now or 20 years from now. And the long term is in my view, is very easy to predict in a general way, but an important way. I don't think there's any way to predict what the stock market will do 10 minutes from now.
Okay, and let's listen to the next one.
Charlie said recently, Charlie Munger, the vice chairman at Berkshire Hathaway, had his daily journal meeting just a couple of weeks ago. And at that meeting, he said that there's a lot of wretched excess out there and that there's a lot of trouble coming as a result. Do you agree with that?
There's always trouble coming. Yeah, there was trouble coming in 1942 when I bought that first stock, all kinds of trouble. Philippines were going to fall pretty soon. There's all kinds of trouble in 1949. There was trouble, certainly trouble in 2008 when I wrote an article for the New York Times. I said trouble is coming, but I said buy stocks.
So, two things that I wanted to cover today. Number one, Warren Buffett, one of the greatest investors of our time, he's saying that he has no idea in the short term. But when you look at the long term and you look at the growth in the economy and you look at the innovation and you look at the future outlook, things look much better. But when we are stuck in the short term, it's really hard to predict, and it just gets you stuck in there. And then the second thing that he talks about, that there are troubles all the time. Just think about our lives in general. There are troubles all the time, right? Sometimes we get sick, sometimes we have trouble at work, we get laid off, so on and so forth, right? We get a flat tire, right? Trouble is all the time. But if you keep a long-term view, and even if you look at your lives and you look at history, go back 10 years and where you are today, hopefully you're doing better, right? So if you think long term, it's easier to predict. And I have sort of gotten off of my personal ways as well, and muddied my thinking into looking at short term. But I don't think there is a reason to thread the needle. The issue is obviously that this has been a great drop, and if you look at back in 2008, we keep referring to 2008 as the Great Recession, right? Great Recession, and look at the move in 2008, and look at the move right now. Um, uh, this is pretty severe. But at the end of the day, and that's the law of nature, that good businesses are going to survive, bad businesses are going to be eliminated. and there are 7.5 billion people on this planet right now. Unfortunately, a lot of people have been infected by the virus, and there have been a lot of deaths. But there is a lot of damage being caused by the restrictions. Obviously, those restrictions are also necessary to keep people safe. But because of these restrictions, there is an impact on businesses. So a lot of times when we look at inflation, we are not counting for inflation in the stock market, right? This this is increase in the stock market. But if overall earnings are growing, they can support increase in prices, right? But now what's unfortunately might happen is earnings might drop, and therefore prices might not be able to support those earnings. So that's the big question mark right now, with this vicious rally that we're seeing. Um, if you look at March, look at this wick over here on the bottom of this candle, you'll see that we had a real vicious rally, right? And this green candle also suggests the same thing. So, at the end of the day, I think within a few weeks we will start seeing earnings, and that's where the big question mark is going to be answered. And we will see whether the earnings are intact. What is the guidance like, and does it warrant prices to be reduced? Or if everything's fine, then these prices would be a bargain. So that's where I am stuck from a long-term perspective. Again, because we've been looking at these levels, I'll cover it. Um, we had a good run yesterday, 7% up 7%, right? We had this bounce, and this is what I've been looking at: the 10-day moving average curving, the 20-day flattening out. But if I were to draw some sort of a channel, because it's sort of building that process on Nasdaq at least, we opened up right here, and we never looked back, and we closed all the way to the bottom, close to the top of this candle. But I think we might just either go sideways, or we might just come down. But I think what's going to be most important is that this 20-day moving average is going to start flattening out, and when we do pull back, we should be holding this channel, or at least the moving average. Hopefully we don't go lower, because if we go lower, this is where that long-term support is, somewhere around here. So, that's on Nasdaq, S&P 500. We're not building that channel, but again, we're building the support on the bottom over here. And the reason why we're not building that channel, because in Nasdaq, as I've said before in previous videos, Nasdaq has it's mostly a tech heavy and a biotech heavy index, whereas S&P 500, it has many other sectors, and some of the sectors aren't performing that well, and I'll show you in the next screen. And therefore, you're not seeing that, if I were to draw a line over here, you're not seeing like the increase that we saw in Nasdaq. So again, probably pull back somewhere over here, 20-day flattening out, and a continuation, hopefully. So S&P 500, we are still down close to 22%. Nasdaq, you can see that it's not as down as S&P 500 or the Dow Jones. Some of the sectors are doing pretty well, whereas others aren't. Like healthcare is doing pretty well, and staples are doing pretty well. Energy over here down 53%, financials down 32%, and industrials down 30%. Those are probably and real estate down 25%. So four sectors are doing pretty bad. Materials down 25%. So that's what's dragging the overall S&P 500 down. Um, these two columns over here, right? percentage from 50-day and 200-day moving average, we are far below in many of the sectors. We're far below the 200-day moving average. At some point, there were some sectors like healthcare and also staples. They were in green. Even Nasdaq was in green, or I think technology was in green on the 50-day. But then we continued selling off. So what it shows to me is that we failed at the 50-day moving average in a lot of these sectors. So again, um, this is what I'm doing for myself. The key is to continue looking from a long-term perspective, because it just makes things easier. What businesses are going to survive or thrive going forward. Number two, looking out for earnings, and if you do get opportunities in the names that you're looking for, it. I think going forward is going to be a stock pickers market, with ETFs or even index funds. It might be the returns might not be same, but if you want to be safe and diversified, ETFs are definitely a way to go as well. But again, keep in mind certain sectors have been hit pretty hard. Not everything's going to recover the same way, as other sectors. So wish you guys all the best and continue learning and researching. Take care. Bye.